Welcome into the session, Sunday, October 12th, 2025. I'm your host, Carlos G. Money Pius. This is our inner circle, legacy circle, privacy trading study group. And yeah, we're going to review the charts, what happened with gold. We're going to kind of just see how it moved, learn a few things, and then we'll close it out with some speculation for this week. But yeah, we didn't have the study group last Sunday, but I still marked up the chart, and this is kind of what I had here, guys. And as always, right, these calls are for educational purposes only. And wow, gold went to 4,000. Gold went to 4,000, and I think it's still gonna go up. I was hoping to go a little bit lower before it goes higher, but we'll analyze to see how it goes. Um, but the gold chart has been tremendously bullish, and we'll quickly review things here, like on the weekly scale, and also we'll review it, candle per candle. But we'll do the lesson here, right? When it comes to the trending candlestick example that I like, because again, there's always a trend. Price either bullish or bearish. There's a trend on the smaller time frame, on the bigger time frame. And what I've noticed is that when there's a really, really strong trend, price is actually trending on the 5-15 minute time frame nonstop, right? We always say that higher time frame is king, which it is, right? Because that's kind of like the more secure levels. But when price is trending, it'll be very, very aggressive on that smaller time frame. And one example, and so I guess you could say we could ask ourselves, right? What is a trend, right? What a trend is just basically price um continuing a pattern of higher highs. Yeah, that right there is a trend, right? Price is increasing, a few sellers step in, but then it goes higher and so forth, right? That is a trender. How does a trend look when it comes to candlesticks? Well, a trend with candlesticks is simply, you have the open and close of a candle. Okay, this is really important. This is your open and this is your close. Okay, remember, this is connected to the price chart on the right-hand side. So if price closed here at, let's say, 3,300 price level. Alrighty, let me see here. Okay, if price closed at 3,300, where is the next candlestick going to open? Well, at that same price level, right? At the same price level, it would open at the same price level. And then during that period, it could be a daily candle, which could be a weekly, 5-minute, etc. It'll do a little wick into the body, and then it will push up again. It'll create the high for that period, and that's how it is. So that's a trend on the left-hand side, kind of with structure. This is also what I call, right, trending candlesticks. Trending candles. You see that? Low, low, low. See how the lows are holding? So that's exactly how it works. Let's hold you. Hey, Dr. Trees, have it here. Yeah, so this is what I call it, I love. I think I shared this with the Nico last time. Actually, let me hide the video panel. I like that word soldiers, marching, trending. I just don't like the inverse of it. What is it called? Crows? Like, come on. Because soldiers make sense, right? They're marching in one direction. But then the what do you call it? The bearish aspect of this, it's like three black crows. Yeah, crows, yeah. Yeah, but I don't like it though. It's just confusing to me. But I do like that. Crows are landing. Absolutely. One at a time, right? But I think with that example, right, it's just consecutive candlesticks. In this particular scenario, is that the low is being respected, and that's what happens a lot. So that's kind of what these are the two things that I'm always training my eye for. with ETM candles, but also this is how it allows me to use the fib consistently, right? Finding those lows and highs. And as we go back over here, we got that. Look at this, guys. 1, 2, 3, 4, 5, 6, 7, 8 consecutive weeks of trending candles. No, I mean, there was minor pullbacks, but 8 consecutive weeks where price opened and closed bullish and boom to the top side. And at some point, whenever price right here, right, when price broke this when it made an all-time high here on in April, okay, which held for a very long time. We'll call this all-time high. Previous weekly. We'll call this previous all-time high. You know, here we have 3 consecutive, look at that, bullish weeks. And we could at least say, hey, at least come back to this candlestick's 23%, right? You know, plan A is first to maybe come back to 23% or something, or 38% of that. Just put it there. Let's see here. Days. We could have said, okay, come at least to halfway, right? Come back and retest that area and then take off. Okay. If that didn't work, okay, at least come back and test 23% of this candlestick. And I believe that didn't happen either. As I measure that movement, let's see. No. And then, nope, it just takes off. You see that? So, like, why is that, right? Why is that? Well, I think it was because, let me go ahead and remove this fib. And those, let's go to a monthly scale. Okay. There goes that month. But I think, I think we've been looking at gold like in the quarterly state, right? I lost my line. There it is. Visibility months. Let's go 3 months. If we measure structure, guys, right? Right, we have an impulse here on the structure. Impulse. This is every quarter, right? This is a quarterly chart. Every candle is a quarter. Impulse, correction, and impulse. Let's measure that right quick. Okay. And let's add some more extensions there. -1. Look at that, guys. It literally at that previous all-time high when the movement doubled, that's where it kind of paused for a very long time, actually. It paused for what, 3 months right there. But this is the first time I'm actually reviewing it like this. Very interesting that right at that previous all-time high, this fib level, right, is literally just it literally is capturing the movement. It doubled the movement from 0 to 1, right? So if I start from 1 to 0, okay, that was about a 1,559 or 1,560 pips movement. Let me just clone this. And then if I take this same movement from this 0, right, when we broke that high, it's literally almost the same. Okay, and it paused right there for a very, very long time at that at this price level right here of 3,500 to exactly. Okay, and yeah, the thing just kept pumping up. But yeah, so it's just like when something is bullish, it just seems to be trending. It doesn't slow down. You just keep buying, buying, and buying until it decides to do a pullback. And what I've noticed, right, that is that it literally is trending more like on the 15-minute scales. Okay, so let's keep those 15-minute scales on. And that's literally whenever we broke this previous all-time high. Okay, we'll erase that. We'll go ahead and go here, go to a chart. This is a 15-minute chart. There goes a nice structure right there, guys. Just the higher high structure right here. Right, impulse, correction, impulse, correction, impulse, correction, impulse, correction. And that's how it trended. That's how it's been trending most of this time, from there. So, in my opinion, I think that's what we still can. We need to continue monitoring the chart that way in 15-minute scales. Let's see how that looks in the hour. We still got some structure there on the hour. I would say that higher time frame structure, it's above the hour. Intraday structure, I would say, is more like in the 1 hour time frame. But also when it comes to the New York session, the 5 minute and the 15 minute is kind of the one to use. And this is a really good example right here, guys, on how we always study the pattern, the structure pattern right here. I was measuring with it the 1 year and go almost as much in the last. Oh wow, that is a lot. All right, so let's check this out here, guys. So, again, we're gonna go back to our structure pattern, right? I personally only follow the ABC, right, or this structure pattern here. Okay, so let's kind of label it here. A, B, and this is C, and this is D. Okay, so instead of labeling highs and lows and so forth, I do that. Okay, this is a structure pattern that I focus on, and obviously this is the impulse. This is the impulse, right? This is the retracement. This is the impulse. This is the retracement. And then this right here is the extension, okay? Which then, when it makes that higher high, that extension becomes the new impulse for me, right? Because once we get another pullback right here, okay? Actually, no, excuse me. Once we get the ABC pattern, and then we get into the pullback, I personally start shifting those letters up, okay? So then, okay, well then this is the new D, C, A, and B, just like that, okay? And then I kind of disregard this leg right there, and then we get a new pattern, all right? So we always said, right, that in order for price to be, whenever for price to have a break of structure, right, the new movement has to break two lows, right? Or the A and the C. Okay. In order for this to really consider that an impulse, like a reversal impulse, if it only does that, okay, and then it does this, okay, and these are this is the worst one right here. These are the worst one right here. Whenever price does this right here, this pattern, okay? And let me redraw it just so it can be a little bit cleaner. And I'm gonna take away the ABC for now, just so we can see a little bit better. This right here is one of the trickiest patterns to read right here. Okay, why is that? Anybody want to share why is this a tricky pattern to read? Daniel, what you got, man? What do you see?
Yeah, well, because let's see. First of all, I'd have to fib this particular impulse. to make sure we actually hit the extensions. And if it did, then so this would be my correction with the impulse, but and this would be the correction down here,
Mhm.
theoretically. Like I said, based on the fib, that's what I would say.
Gotcha, gotcha. Well, and actually, that was the same pattern I was drawing. It's a good catch there, man. But
Yeah.
check this out here, guys. So here, right, this is showing bullish structure, right? Bullish structure right there. It's got the lower lows, the higher lows and the higher highs, right? However, it can be interpreted where, okay, you know what? Oops. It can be interpreted where sellers are creating their own structure, correct? They're also creating their high, their low, their lower high, and their lower low on that scale, right?
True, but the difficulty comes in this little arch thing, because is that a true, like I said, the only way we would know for sure if it was good is if this was an impulse and if this was definitely a higher high. It looks pretty close.
Mm-hmm.
This one here was a higher high than the previous, so that's where the trick comes in, is eyeballing my new price line.
Gotcha, gotcha. No, for sure, for sure. And we'll definitely go back to those charts right there, gentlemen. But yeah, this
Yeah.
little pattern right here happens a lot with gold. Happens a lot, and we'll look for that pattern here momentarily. But yeah, right, and that's what I'm saying, guys. It's really important to understand that to break the structure, we need to break two lows, two lows, right? This low and this low for it to be really bearish. Just breaking one, or even if it's creating structure here to the downside, it is not a good thing. And then, I mean, it's not a confirmed thing. But however, right, what's this pattern right there? That's an M, right? An M means bullish. What is an M in more technical analysis? A harmonic.
Mhm.
And that is a bullish harmonic as well, where you have your X, your A, your B, your C, and your D. Even though, like, let's say we do break this first structure level right here, okay? Remember, we got to break this one. This is the one that we have to break in order for us to really be a reversal. Okay. So even if this happens, this is still a harmonic.
Mhm.
This is still a harmonic here, kind of more like a shark, right?
Yeah.
Grabbing the low and then going upwards. Alrighty, guys. So again, though, right? That's why it's really important to read that first stronger leg of price action. Let's see, McCary saying it's creating its own structure between the most recent high and the most low. Okay, now I like that observation. I do like that observation. It's creating its own structure between the most recent high and the most recent low, but it hasn't even broken the first low. Okay, so it's trying to build something, but it doesn't really build it that way. So I would say there on Kelly, just to in your comment right there to close it out, I would just say, and this is exactly what she's saying. I do like this. I do like this explanation right here. Thanks for sharing that. So this is the this is the control direction, right? The green. Okay. And then the red movement, as Carrie mentions here, it's creating its own structure in between the most recent low and high. Okay. But because this is still dominant, we have to favor bias, right? This is what creates uncertainty, guys. Remember, in trading, price moves in a way to create uncertainty, right? And if we create uncertainty or create a new direction down when we're bullish, when this gets created, right? When this structure here gets created, what do we expect next to happen? A pullback, right? Enter from here, right? Let me clean that up right there. Now, this is a good example here. A lot of times as well, right? We call these lows liquidity, correct? It's going to go for liquidity. So we create a high, we create a low, we create a lower high, okay? And then we somewhat create a lower low here. How do you trade the red pattern, the red path? Well, right, you wait for a pullback in between the lower high and the lower low. You enter here. Where does your stop loss go? Either there or there, correct? Trying to complete this lower low or trying to go for liquidity. Well, guess what? The moment you play this pattern right here and you put your stop loss, guess what we just did? We added liquidity, right? We've added liquidity to the market ourselves. Liquidity is basically just pending orders of a stop loss or take profits, right? And then what happens? Boom. And that's exactly what happened here, guys. Impulse correction. This one actually did wick a little higher high. It comes down very fast. It broke that structure. But look where the pattern is coming from. This is this. Color that green. And then this is that. Color that. Okay. What's more dominant? The green path, the green highlighter is still more dominant. And there goes your M pattern. You see that? Hit play. And there it goes. There it goes. Okay. So let's see if we can find some more patterns like that. There's quite a few. We'll use we'll use the harmonic thing to find those patterns. And there goes one. Here goes another one right here. We're gonna start seeing them all over the place now, right? And we're in the 1 hour chart. All right, let's see. We'll hit play. I just made another one. Oh, that's it right there. Yes, we're live. I don't know we were live so soon. Now this one's gonna be interesting. This is a live chart now, right? You guys saw what happened right here? Right, we literally just built another harmonic pattern right there. Oh, for sure, Joe. Go for it, man.
Okay, so the drop that finishes the harmonic then when you're at the top before it drops, man, that can be, I mean, that's a big drop, right? That can hurt. So what do you look for there to know that you're at risk maybe? I mean, because you're the structure and the trend is up, and then all of a sudden you get one of those huge drops. So what do we look for? Is it the double top? What do we look for that would tell us, okay, beware, we may be seeing some kind of correction or pullback or something?
Good observation there. So you're basically saying that we're following the trend, and then let me label this, right. This is the X. This is A, B, and C, and D. So basically, you're saying that C to D drop, right?
Yes,
That
yes.
C to
When
D.
you're at C, is it the double top? But what tells us, okay, be cautious.
Correct. Yeah. So yeah, double top, right? Double top, and even there's three types of double tops. I always said, right? So when you have a double top, you have the equal high double top, right? And then you have one that is kind of like a little bit slanted like this, like that. And then you have the one that it kind of we say kind of grabs a little bit of liquidity, right? And then it drops. So but it's still the same pattern here. So this is where we measure, Joe, the X, and this is where pattern recognition becomes very important. This pattern is very, very important to understand. Not the harmonic not the harmonic movement to the T's, but just that M movement. Okay, you know what? If it's not going to create an N, okay, what's it going to create? It's going to create an M, right? So how do we protect ourselves from this? That is basically measuring. Let me go ahead and remove right here. Okay. This is where all going to come full circle, hopefully, right? This explanation. So we got the impulse, right? And then what do we have? Once we got an impulse, we measure it. Everybody, everything good there, Joe? Right? It's pretty straightforward, right? Right there.
Yes, I'm with you. Thank you.
Perfect. So what's our strategy here? We probably would like to enter maybe at least at a 50%, right? For the most parts, we try to enter at 50%. Okay, well, if we don't enter there, we wait for price to come back and establish itself above 23. So price does that. Okay, perfect. It's starting to establish above 23, but it doesn't really hold. It tries it again, and then we get this drop right here. So I probably would be playing the buys right there, Joe, at that 23% level, right? Because we're more bullish than bearish. Take your chances somewhere in there when you see some intraday structure and so forth. But the moment this happens and we get back below the 23%, it's only going to go down. You know, I think we were actually trading this day live, guys. I remember this is the day we were looking for that 30-minute rally-based rally to continue the longs. And there was some money lost right here. And this is the day, Pablo, I think that you were off that day and you put in a comment, there's a lot of blown accounts today with that huge drop. I did take a minor loss there. And I mean, I even think yeah, we were playing this 30-minute rally based rally, Joe, right here. Right
Okay,
there.
so that long bullish candle, or I'm sorry, bearish candle that broke the 23, that right there is a signal that says abandon ship, right?
Correct, correct. But with more confirmation, we got a nice impulse with the fib. We're below that 23% level. It's already we're already visualizing that it can make a harmonic, right? That's another thing as well. It can make a harmonic like this, at least in between the 61 and 78%. And yes, let's close it out. And again, the price always sometimes it does give us a chance to recover, right? You know, and you know, we were looking for us to we were looking for buys right here at this 30-minute rally based rally. Okay. Right there. Okay, we're looking for buys right there. Mark this up. 30 minutes. We're looking for buys right there. Because actually I think this is what price is trying to come back um to start the week. That's why I'm taking the time to highlight this. Okay, right there. We got that 30-minute rally based rally. We also kind of formed that double top, retesting that 40-60 price line. Okay, and then it and see it didn't even on the 30-minute chart, it just boom, did all that. Okay, it did all that. And it comes back kind of to retest the 23% line. And then we go back down again, back to that 78%. Okay. And that's to answer your question more specifically, Joe. Yeah, it's just whenever you get the big drop like this and it gets below 23%, there's no buyers trying to buy. They're just trying to buy lower. But most importantly, right, we're we have an eye, you know, we have a visual on that potential harmonic pattern that it can form. And there could have been a good way to make money from here to there. Okay. That would have been good. Yeah, right there. Here buys, obviously they're nice, but you just have to wait a little more. Let me see here. Andres was saying let's see, even if it looks like. So you, Aldrich, for the most part, reading your question there about the 61%, you don't take action until it touches 61%. Was that what you're saying? It can hover above and so forth. Yeah, perfect. Okay, yeah. So there goes Audrey's observation, and I know he does this on like on a 1 minute time frame. What can happen after the M? Okay, yeah, Sylvia. So that's a good that's the pattern recognition when it comes to the harmonics. Okay, so the I'll share my. So this is X, A, B, C, and D. So this is a bullish pattern, a bullish pattern. So for the most part, right, we're gonna get a push back up. Okay, that's what's gonna happen once we finish that M. And why are we gonna get that push back up? Well, because from A to the right hand side, what pattern do we have? We have a N to the downside, a bearish N. And we literally just completed, right? So again, like it's like they're all connected, right? The M and the N, the M and the N are connected, right? Impulse, correction, impulse. What happens when we make what pattern is this? What structure is this doing? It's making lower structure. What happens when we make a lower low? It pulls back. Okay. But the big movement is happening from this leg right there. So here, right? I still think, let me fix this. I still think there may be an opportunity for the sellers to step in one more time. Let me go ahead and hit play. Well, not hit play. Okay. And here, right? Here, we're going to see how the 23% level, okay, behaves. Okay. That's kind of like the game plan for me. I like to bet on the hour chart. Okay. I like this whole M pattern right here. Okay. So my favorite low, my favorite swing low is this one to that one. Okay. That's my favorite swing low right there. If I add in there the higher time frame candles, it's 2 days. Okay, 2 days. So I like that swing. I like that swing right there. Let me remove that. So this is kind of like my favorite swing right here, or impulse, right? When I say swing, I mean like where I take actual structure, not just days or highs, days or weeks. But that is my favorite structure. So this is the fib that I like, guys, right there. Okay, that's the fib that I like. I like this impulse. I like this correction. Came very deep, institutional level, right, Dr. Latrice? Okay, and I would like to see how price behaves around that 23% level. Let's add the prices in there. Yeah, sure, Joe. Thank you. Okay. So that 40-30. Okay, but even between now and the 23%, that's a lot of pitch right there. That's still about 170 pips. We got a nice little base drop pattern. Nice little fair value gaps in there, which is also that 30-minute area, right? Okay, that's right. 30-minute area. Yeah, one of our colleagues, so Nandi, he's trying to wrestle to be a swing trader or not. And he's a really good mark. He knows how to mark up charts pretty well in the swing, but those corrections hurt sometimes. And I think it's really, really, I think if you're trading, swing trading has to get out the window, guys. There's no, yeah. I think we at least get to 40-31. Okay, 40-31. I really do. There, right there, I think the price will make a decision. Are we going to continue going up or down? All right. How many trades do you do per day? Well, I try to go for like a percentage goal or a dollar goal, Sylvie. Whatever it takes sometimes. Um, I'm really flexible with my entries, meaning that, you know, I don't always go in with risk percentage lot size. I test the market a little bit. And if I feel like it's going in the direction that I want to, right? Once it kind of confirms the direction, I'll enter some more. And then just to kind of complete the dollar percentage amount that I want. But what I like to do, like let's just say, let's quickly review the the drop from. Well, I got the drop. I got this drop on Friday, right there. Okay, that's the drop that I was able to get on Friday. Simply because I think we're at a 45-minute ETM candle, right? Yeah, ETM in 1 hour as well. So I entered a few positions here, one, two, okay. And then whenever I think I saw this nice engulfing candle, I entered another two positions there. I believe I took profit right at this level. Okay. Uh, let's do it like this. So I put one, two entries from the top. And then when I got this engulfing candlestick, I entered twice again. Okay. And then when it came to the 4,000 level, okay, I took profit here on three positions. And then when price hit this level and then kind of did a little retest, I entered again another one or two positions there. And I was trying to get it to 71. And so my stop loss is based on how much am I willing to risk, right? So for example, if all together, right, all the positions enter, they'll give me good amounts of profit pretty quickly, but also any 5-10 pip movement will also kind of, or even 20-25, right? 25, 30 pips of movement, all the positions together, cumulatively together, they will give me like one -1% pretty quickly, right? So when that happens, okay, uh, just depending on, then you check your technical analysis and so forth. Um, like, oh, you know what? I don't like this trade. Let me get out and regroup. And actually, this is actually what happened, guys. Yeah, now that I remember, this is actually what happened. Because remember, I was trying to go for the sell a little sooner. Okay. I think I was trying to go for the sell from here. Yeah, once you guys know how to multiply your money, guys, um, you'll start knowing how this pip movement is. And I'm starting to just now take profit. Gold is moving a lot nowadays, you know. 50 pips, take some money, take pocket some money and go. Yeah, I was actually looking for sales around this area. Okay, something like this. So I did the same thing that I showed you guys. I entered multiple positions. Like started there, and I got in some profit right here. Entered again, and then like, oh man, this thing does not want to go down. Like, all right, you know what? I'm gonna cut it right there. I'm gonna cut it even before that push up happened. Like, I'm done. Let me cut it, right? But and then price got all the way up there. Like, okay, I'm gonna give you one more shot right here, and I was able to recover and get be back in the positive, and price did all that again. But I think that comes with time and experience. But it is important to pocket in and not being afraid to lose either, guys. I think not being afraid to being wrong and understanding that okay, you're gonna win some, you're gonna win more than you lose. When you win, you're gonna your profits are much larger than your losses. And but again, the hardest thing about trading is the thing that we want to master in trading, right? Is closing trades, closing trades in the positive and closing trades in the negative, and don't let those wins or those losses affect you, because sometimes when you're in the winning streak, we want more, and you lose it all, and then more, and then sometimes when you lose, don't give up so soon. Give it another shot because again, prices are going to go up or down, right? President go just up or down, just a matter of like maybe you were just too early, but you were in the right direction, and then be able to recover your money back and break even, then be happy at break even, right? If we need to. So it just all depends, right? And take partials, yeah. Yeah. So what I do, Nico, let's just say you put in a standard lot for whatever reason, and this is something that I learned from a colleague of mine. Uh, what's it called? Is like the psychology of how money grows and multiplies on a standard lot, right? Versus let's just say five of these is different, right? Like being in drawdown this entire amount together or in profit that entire lot size together versus what is it called mini lots, standard mini lots. I like this. I like the numbers here better. I like being in positive in these better versus these and negative. So yeah, so the way I take partials in Nico is I just close those positions that I enter right there. I just close the positions that I enter quickly. So let's say I enter in partials. How about that? My entries are partial entries. Yeah, right. That makes sense. That makes sense. All right, let's see if I missed anything else. Perfect. All right, so let's do a top-down analysis with Goldie. See where it's going this week. And we'll see how it plays. So go to my favorite time frame 4 hour chart with the higher time frame candle sessions. Okay. 1, 2, 3, 4, 5. I mean, it's been a bullish scenario the entire time. Um, but we'll start from the weekly chart so we can actually get the actual candlestick low to high. Previous weekly high and previous weekly low. Right there. So now we literally go to the 4-hour chart, okay? And we do a couple of things here, okay? We'll do a few things right here. We'll first measure low to high. We'll go to exactly Sunday, 1700 hours to start the fib, and we'll lock the fib right there. Previous weekly high, right there. What was the price level down here? 3884.50. We'll do this exactly. 3884. Oh wait, 85. High over here was 4059.21. All righty, guys. So there goes our fib. Okay. What's the structure that we see kind of like we can look at the previous week. Um, so but this week we only have and from last week, excuse me, we only have an impulse and a correction. Okay. That's the pattern that it left with. No real structure. Okay, no real structure was left there. So the entire structure, I think, is coming from the previous week as well. Impulse, correction, impulse. That's gonna be interesting right here, guys. Okay, because it literally is going to remember that 23% level that I told you guys about? That one right there is going to determine if we go lower or we go higher because I'm seeing a potential Elliott wave forming from this structure. Okay. From this structure right here, I am seeing a potential Elliott wave forming. So that's going to be interesting. We can call this 0, 1, 2. So 1 like this. 2 to 3 is always the longest wave. This is 4. 4 did not come into the support and resistance of 1, so that's good. It passes that wave here, and then here we got 5. The tricky thing about 5, right? Sometimes it just goes barely to 3, and it's done. Or sometimes you can read the extensions and it's done. So be very mindful of this. However, if we do complete this bullish pattern, Pablo, la M de aquí, sí, es lo que me favorece primero. But the thing with this one, guys, if we do complete this Elliott wave, okay, like I just drew it, if we do complete this Elliott wave, this then becomes one solid leg or one solid impulse based on the pattern. And because that's one solid impulse, depending on how high it goes, we can get a bigger drop to 23, 38% of that impulse. Okay, so just got to see, or even 50%. Let me put it there at 50%. Yeah, 50% all the way down here. Okay. But we'll play it day by day. But I do want to make sure that we keep that Elliott wave in mind. So right here, guys, previous weekly high, previous weekly low. I will mark up right here the 23% area. So previous week, 23%. And that to me is going to be the deciding factor if we do the M or we do the N. Okay. Right there. So I think I like the 1 hour and 30-minute charts. Yes. Okay. Rabbit hole territory. I think it's just about just knowing, if we analyze in the way like, okay, where is price going? How many pips is there for me to catch? That's sometimes, all we need. Understanding fundamentals is important, I think, for longer terms, but it's all unpredictable. We don't know if the news is bullish. I mean, if the news is real or not, you never know, right? Like all this time, right? All this time, like during this, I think since President Trump got elected, hasn't Tesla gone down in value, and a lot of negative news has been talked about Tesla, right? All over the news, etc. But Tesla's been going up. Well, we got up after a point of where we wanted to. Let me see if it comes up here. Look at this, guys. Drop, drop, drop. Yeah, like when did President Trump got it? Like January, right? January something. And then uh Elon Musk was getting involved there with, hanging around with the president. Was that purposely done to get this thing dropped back down? Okay. If Tesla was really in trouble, this thing should have gone to zero, right? If Tesla was really in trouble, this thing should have gone to zero. But no. Gracias, Pablo. Nos vemos mañana. This should have gone to zero, but no, it literally just completed structure, guys. Impulse. Let me highlight this fib a little bit better. Oops. Right there. I had mentioned below 300, look for buys. I'm going to erase this one. Okay. But look, we have the N wave structure there on the weekly scale. We hovered around the 23% around January, dropped all the way down to 78%, the institutional level. We had a rally-based rally waiting right there. During this entire time, I've been getting emails from I don't know where that cyber trucks are exploding, this, and that, this, and that. And look, it just went all the way back up. So long story short, I think just tying in fundamentals um, can hurt in our analysis. There was a friend of mine on Facebook that he posted that a crypto trader lost all his money and he took his life, I think. I don't know exactly. Like, a well-known crypto trader took his life because he lost millions or whatever. He lost all his portfolio, I guess you could say. And big mask, it's real, right? But if you know where to take profit with the fib and be okay with it, and if you know where the pullback potentially could come and get a reaction, you can strategize better, kind of the prices. And look at this, guys. It went all the way back up to where it originally sold from. Yeah, it doesn't happen if you have no stop loss, but at the same time, Andre, it happens too because we don't take profit either, right? And if you do take a stop loss, you don't know where price is going because we have all this education about, oh, it's just manipulation or et cetera, et cetera. No, it's just, having a map out for price allows us to really take a loss quick, but they get back in because price can get in that area. Right. But yeah, I mean those things can happen. Yeah. So see now, right, with Tesla, we're back above that 23%. If it establishes itself above 23%, we know it's going to the extension. With gold, I see the same thing. I think we go higher, how high we can go. Right now, I really don't know how high I can go unless it's in the news somewhere. Um, but just on this intraday that we're following, I think the biggest, how we can capitalize from this is just knowing how many pips do I need. Okay, the pullback can be deep, the higher high can be high. How many pips do I need today and be happy with it? And then I'll study the structure the next New York session. All right, today's New York structure is bullish. Okay, I'm gonna go for a few pips. I just need 30, 50 to 90, capitalize, take the profit, and wait for the next New York session. And then we see how the structure and momentum is from there. Okay. I can look it up there in a second because I've been seeing a lot about that in NVIDIA. Um, I'll check it out, but let me wrap up here. We have time for that. You're sarcastic. All right, perfect. So, 23% level. I personally do like this flip zone on the. One thing I was going to say here before I go there. We still have a bearish day. Okay, we still have a bearish day, and buyers have been a little bit aggressive when I'm not allowing it to break the 23%. But we are getting into that deep discount level of Thursday. Right there. We are getting to the deep discount level of Thursday, 78%. Okay, that is the institutional level of this day. If the sellers are there, if there's still sellers remaining on Thursday, okay, Thursday candle. If there's really sellers still there on Thursday's candle, once we get to that institutional level, of that 78, 88, 86% level, that's not bad, right? Not bad to get a position around here or just wait for a reaction. If we get the reaction back below the 23% of the previous week, we're going to bounce off this 2-hour rally base rally. And if this 2-hour rally base rally does not have the strength to take us back up and that 23% level holds, I see that. That's what I see. Right there. To our rally base rally, institutional level, and simultaneously, it's a nice engulfing candle. I think that's kind of a BC, but not really. They didn't print it. But right at the institutional level, we had that rally base rally where a lot of money was taken right here. And it's lined up perfectly with that institutional level. 30-minute flip. So long story short, if you want to sell high, that's the area to sell high. If you want to buy low in this scenario, I would buy low at this 2-hour rally base rally. And this is so high. And we'll just call this Thursday's candle by itself. Right there. Yeah. So there goes the map, guys, for today. For this week ahead, I'm favoring more the downside. Okay, for now, just be based on technicals. I'm favoring more of the downside, but we'll see how price plays out. Okay. And if we do sell high and it does go down, I would like for it to go to the extension of Thursday, which will come back and touch about 50% of Monday. So it's Monday, Tuesday, Wednesday, Thursday. This is Friday. Maybe we get down low this week, but if not, we'll just keep going higher and we'll then follow this fib. Ah, is it tomorrow? What's tomorrow? All right, let's take this back to the 2 hour chart. And then we'll look at video real quick. Ah, tomorrow it is. Good clean charts. All right, let me share that with you guys. The 61 of that bigger impulse. That you taking all this right here? 3, 9, 10. No, you probably taking talking the whole swing, the whole swing. Yeah, I got you. I got you. I got you. I know what you mean. Yeah, this entire swing, huh? Makes sense. Makes sense. I was looking at the video real quick and we'll call it out, guys. What's the stock for it? This one? What do I search? Yeah, that's right. That's it right there, right? Correct. Yeah, I don't know why these stocks they bounce a lot. You know how it has a lot of gaps, but it is what it is. And look, we have here, guys. We just literally just learned this. The M patterns. Literally just learned that. So this is the low, high, higher low. Yeah, this is not a okay. So I'm going to fib here to there. Mhm. We got the M pattern there that we just quickly learned about. We actually grabbed the low of this little air here and just took off. Broke the structure, right? Broke the structure and just skyrocketed. Not this is going to continue going up. Like a little rally-based rally. Maybe come back and retest the month of September. Okay. Well, it's still very bullish, man. Still very bullish. Very bullish. This little pause that we took, I think sometimes it adds power to it. But yeah, I still think it's very bullish. Remember, smaller when price trends on a smaller time frame, that's aggressive. If we go to the weekly scale, we would need to break 1, 2, 3, 4 weekly candles to really be bearish. So it's literally coming for those areas right there. All this right here, this previous weekly high, this previous weekly high, they're going to behave like support. So yeah, I mean the price action is not the best because all those gaps, but let's see. Yeah, it's very interesting how it opens and closes. And look at that here, guys. Rally base rally, 2 touches, takes off on a monthly scale. So that's interesting. Yeah, well, this is our first glance on this one. I'll come back and check it out. I'll find a better chart, but based on this, we can still go higher. But if not, we'll take a look at it better and analyze it. I literally was thinking the other day too, I need to maybe just diversify a little bit. Uh, but I'm getting paid okay, so why? Why, right? Forex gold is paying okay, so all right. We will close it out, guys. As soon as the recording is upload on the YouTube. Do appreciate everybody's attendance. Any questions, guys? Definitely use the WhatsApp for questions. Help us out there. Remember, we did make a little update on it, where we have our 1 second here. Where is my
I got a question.
let's see. Yeah, on the WhatsApp, guys, you can always use the WhatsApp to ask questions there. The WhatsApp exclusively for this inner circle group or legacy circle group. Anything kind of like my team outside of the COC. But anything regarding COC, FIBO, definitely ask them during on that Telegram. We'll go from there. Let me stop the recording. Any questions you guys have, I'll take some time here to answer. But appreciate
Yeah, let me just real
1 second.
real quick, like G.
Let me stop the recording, Mr. Ron. We can get that.
Okay.
We'll go from there.